Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 3rd of February 2020, so yep, welcome everyone. Welcome to this Monday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through a bit of our risk disclaimer, and I'll let you do the rest after that. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. So as I said, I'll give you a few seconds to read the rest and we can continue. Okay, so also just before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yep, I believe you can find a lot of useful stuff here for yourselves, guys. So feel free to visit us here on jfdbank.com and click on the research tab right here, and it'll take you to our page. Now then, let's jump into the charts. Now the first one I want to touch on here is the S&P 500. Now looking at the technical picture in this one, and this is the one that I've talked about on Friday last week, basically what I was saying, that given that we've managed to break this this medium-term upside support line, there is a possibility for this one to drift lower, especially if it drops below the 3,234-35 territory. So we did get a drop below this. We saw a drift further south, but as you can see, the 100 EMA here on the 4-hour chart acted as a fantastic area of support from which the index rebounded. And looking at the cash index right now, we can see that the price is back above this 3,234 territory now. Of course, on one hand, it seems that the bulls are really not giving up, but we'll see how they will be able to fight the other this little short-term tentative downside resistance line here, guys. So for now, basically the new trend is the short-term trend is to the downside. In a way, even if we're going to see a bit more upside, all this upside as could be seen as a temporary correction before another leg of selling, because as long as this little short-term downside line remains intact, we will continue aiming for lower levels. Initially we'll target the 3,198 territory, roughly around here, and then yep, we will aim for the 3,154 mark, which is the high of the 27th of November. So if, let's say, this decides to travel towards this area, by the time it could travel here, it might also test the 200 EMA here on the 4-hour chart. So that's why, guys, for now this area for us could look quite attractive. But of course, the main question here is, can this stay below this short-term tentative downside line taken from the high of the 24th of January? If this by any chance gets broken and we see the price accelerating above the 3,293 territory here, which is the high of last week, now this is where it could become a little bit more interesting for the buyers, and we could see this one traveling back towards the all-time high near the 3,337 38 territory, roughly around here, guys. So yeah, guys, for now, of course, our main scenario is more to the downside, although we could see a bit of correction here, a bit more correction. But if this downside line holds, then yep, another round of selling could be possible. Gold. Now, I haven't touched on this one for quite a while, and you can see the kind of the let's say not a great movement here on gold, and for now basically it's a bit of a tricky one. So on one hand, yes, it is trading still above this the short-term upside support line taken from the low the 13th of January. So this is a bit of a tentative upside line. We're keeping that one on the chart for now. Overall, yes, we are still above this medium-term upside support line taken from the low the 26th of November. But as you can see, we have distanced ourselves quite a lot from this line, so we're keeping that one on the chart, but to be honest, we're not focusing on it too much. But from the short-term perspective, what we're looking here for, of course, is this upside line taken from the low of the 13th of January, and in a way we could also try to draw something here, an upside line taken from the low of the 23rd of January. Now again, all these lines are a bit of tentative, so in a way don't really focus on them too much, mainly focus on the support and resistance levels. Now if this by any chance breaks this upside line and drops below the 1573 territory, which is to date low, now this is, yep, we will consider maybe a deeper move to the downside, but again we also have this this upside line and some key levels here first that would need to be overcome in order to consider further decline. So in a way, for us to consider the downside, or let's say to get a little bit more comfortable with the downside, a drop below the low of the 29th of January, which is around the 1563 zone, that's what we would be looking for in order to get a little bit more comfortable with further decline. So let me just quickly drag this one right here. So I'll drag the highlighted area for our future reference here. Now, and if we do get a drop below this, then yes, we will aim for the 1551 zone and the 200 EMA on the 4-hour chart, but until then, still the bulls have a chance to join in here again and push this one higher. So from the very short-term perspective, what we're going to do here is we'll keep an eye on this little short-term upside line, and if it rebounds again from it, then yep, we will aim for the upside. But for those who are more on the cautious side, what you could do is just wait for a break above the 1594 territory, or 1594, 1595 zone. And if we do get a push above this, now this is where the commodity would confirm a forthcoming higher high, and yep, we could aim for the 1612 territory, which is near the high of the 7th of January, or in other words, near the highest point of January. Bitcoin Cash now, haven't looked at this one for quite a while. As you can see, all my levels were here, so in a way kind of worked out nicely. So let me just get rid of the drawings here, and previously, like in the beginning of January, look how well this price performed, how well this has traveled to the upside. Now what we're seeing here, of course, what we're seeing here is the nice uptrend, but what from the more of a shorter term perspective, let me just zoom in here a little bit. Now what we're seeing here is a nice little squeeze. So in a way, some could say maybe this is this could be maybe a sign of a flag here, bullish flag, but to be honest, we don't have a nice pole here, so that's why we're going to ignore this. We're just going to take it as a nice squeeze. And if we do get an explosion here to the upside, for us to get a little bit more comfortable with higher levels, well, ideally we would like to see push, initially a push above the high of today near the 393 zone. Then of course, ideally we would like to wait for a break above the this little high here, the high of the 18th of January near the 404 zone. But if that gets broken, well, this would confirm a forthcoming higher high, and yes, higher levels could be met. But again, for now, guys, wait for it, because on the other hand, if this squeeze leads to the downside, now we could get another test of this short-term tentative upside support line taken from the low of the 3rd of January, and then of course we'll take it from there, because maybe the bulls would decide to enter the game around here, around this upside line. Don't get me wrong, if this upside line starts breaking, then yep, well, further declines could be possible, and what one of the levels to keep an eye on is of course around the 350 territory. A drop below the 350 mark could open the door towards deeper declines, deeper extensions to the downside here. And yep, we could aim for the 305 zone, or this little area near the 296 territory, which marks the low of the 24th of January. Now, again, like I said, long story short, if you want to be on the cautious side, then you can just wait for a push above the initially above the 393 zone. Then be very careful around here near the 404 territory. But if that gets broken, then yes, it could lead towards higher levels. And in terms of the downside, 350 zone, that's what we're looking for in order to aim for slightly lower levels. USDCAD now. USDCAD, I have looked at this one last week, and basically what I was telling you guys to keep a close eye on this downside line and this 1.3250 territory. Now, as you can see, the pair is struggling to even close a 4-hour candle above this barrier. It does have its overshoots, but still it struggles to close above the at least a 4-hour candle to close it above the 1.3250 zone. It is currently balancing just slightly above this downside line that I talked about previously. This one is taken from this medium-term downside resistance line, taken from the high of May last year. So in a way, we could actually we could get rid of it now. But the main level for us at this point in time is the 1.3250, because as you can see, it is struggling to kind of close a 4-hour candle above it. So if we do get that close, then yes, we could get a little bit more comfortable with higher levels. Then we will aim for the 1.3270 zone, which is the high of the 6th of December. But still, the more important level for us is the 1.332728 zone, roughly around there, which is marked by the highest point of November. So guys, keep your eyes on this one. Could be quite interesting. And let me just actually recycle one of these highlighted areas. So yep, basically that's going to be for our future reference, and this is what we're going to be keeping an eye on. It's this 1.3250 zone. In terms of the downside, now the downside, yes, if it drops below the 1.3186, we will consider deeper extensions to the downside. The only problem, of course, is this this upside support line, and I mean the problem for the bulls, or sorry, the bears, is the this upside support line taken from the low of the 7th of January, because this move lower could still be seen as a part of a larger correction to the downside, because if the rate remains above this upside line, we could see a nice rebound and a push back to the upside. But of course, if this upside line breaks, then yep, we'll reevaluate everything again and see if it actually wants to drift further south. For now, the downside, like I said, we will start looking at the downside if we get a drop below the 1.3218. But to get a little bit more comfortable with this extension towards this upside line, a drop below the 1.3186 level would be needed. GBPNZD. I talked about this one this morning, and this is working out nicely right now. So what I was saying, that in order for us to get comfortable with the upside, we needed to see a nice good strong push above this barrier here, the 2.0417 mark. But what I was saying, that given that we had a strong uprise here last week on Thursday and Friday, we will consider a potential correction. So we did get our correction, and the level that I was talking about this morning in my Traders Espresso was this one right here, the 2.0146 zone, because if that gets broken, and if we see a nice close of at least a 4-hour candle below this, then yep, in a way there could be a possibility maybe to see this one drifting further down south. But given that it got a hold, it is currently getting a hold up here, the big question here is, will this act as a nice area of support from which the pair could travel back up here towards this this high near the 2.0417, or actually will we see a drop lower? For now, we're gonna just wait this one out. We're just gonna keep on monitoring this level. If we get a nice drop below this, then yes, further declines could be possible, but only up until this short-term upside support line taken from the low of the 26th of December. And as I said, in terms of the upside, if this rebounds here from this area and travels back above the 2.0240, then, well, we could consider the upside. But the only thing is that, to be honest, given the situation here, we would rather prefer to see a push above the 2.0417 level first before examining the upside. So keep your eyes on this one, guys. GBP Euro. Now, that's not normally we all look at Euro GBP, but something a little bit different here. GBP Euro. So this one is drifting lower, and previously when I looked at this one last week, I was telling you guys to keep an eye on this short-term tentative upside support line taken from the low of the 14th of January. Now you can see that the rate broke below this upside line, but it still remains above this 1.1780 zone. So I talked about this one, and basically what I was saying, that even if we get a drop below this upside line, we still need a break of this 1.1780, because this way, if we get a nice strong move below this, then this would also place the rate below the 200 EMA on the 4-hour chart, and in a way, kind of, it could be seen as a bearish indication here, where the pair could then drift further south, maybe towards the 1.168990 zone, or even all the way here towards the lowest point of January, near the 1.1631. But again, for now, it's too early to talk about that. First, we need that nice, good, clear drop below this 1.1780 before we could consider the downside. If by any chance this suddenly travels back above this upside line, of course, it increases the chances of a potential move higher. The only problem here right now is, of course, just to be on the safe side, guys, wait for a push above this barrier, because this way the pair would confirm a forthcoming higher high, and yep, more buyers could join in here. All this zone here, all this territory would be somewhat of a neutral one for us, and we would just continue observing the price action. For us to get a little bit more excited about the upside, we would like to see a push above the 1.1922 zone, and only then target the upside. Euro USD, the last pair for the session, very quickly on this one. So it also is working out nicely. Now, this morning, what I was saying, that there might be a possibility to see maybe a test of this downside line, but as you can see, it kind of started drifting straight away to the downside. But what we're going to do here right now is we're going to keep an eye on this little level right here, the 1.1040 zone. So 1.104039, roughly around here. If we get a nice drop below this, then yes, we will start aiming again for the psychological 110 zone, or even below that. If it rebounds from somewhere around here, for example, because as you can see, it's getting a hold up near the 50 EMA here on the 4-hour chart, shown as the red line. So if it rebounds and travels back to the upside here, we'll still be a little bit more on the bearish side, because as long as this downside line remains intact, it's still the trend is to the downside. So that's why we're going to be aiming for lower areas. For us to get excited about the upside, now previously I talked about this 1.1118 zone, but given the current kind of structure, we could start looking at higher levels if we get a push above the high of Friday near the 1.1096 territory. This way, if we get a push above this would also mean that the downside line is now broken, and well, this in a way, and this would also place the rate above its 200 EMA on the 4-hour chart. So basically a lot of positives here for the bulls, but we need to see this break above this 1.1096 zone first before considering a potential move to the upside. So guys, for now, of course, the main scenario is more to the downside, especially if it drops below the 1.1040. If it pushes back to the upside here, we will only consider the upside if we get a break above this barrier, the 1.1096. So keep your eyes on that one. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, 7 o'clock GMT time. For now, guys, I hope you have a beautiful evening, and I'll see you tomorrow. Thank you very much, and bye-bye.